Apparently, we're surrounded by losers. They won't get over here and learn.
All right, I put the word out. I'm not even going to bother trying to feed this live over to YouTube today. I tried a couple of different things and still wasn't solving the problem. It's another day for another day.
Well, it's a Friday. I don't know. We'll see if people show up. Ah, here they come.
Just grabbing some pictures and helping someone with this Fastenal trade. They were interested in a long. Fastenal's been doing okay, but I mean it's got horrible options, and then there's the backdrop of the general market. The idea that if you want to try to trade something right now, if most of the market is suffering, any trade you try to do is also going to suffer. It doesn't mean that it can't work, but you have to take that consideration into account. So when you do find something that's moving in the current market backdrop, make sure there's some news to it or some reasonable understanding of why is it moving. If it's just moving and you can't find any reason, then try to keep your position small because you don't really have the backdrop on your side. That's the idea behind it. So it's a nice breakout for the person who asked the question. Yeah, the breakout above 78 was also the breakout above yesterday. Now that we're above it, we kind of need to keep it. And if we're looking at it on the daily, then we've got 82 as resistance, and the idea should it should stumble around 84. There is a concept called if 80 then 100. It sounds like a little T-shirt or something, but it has a lot of truth behind it. So if we can close above that 80 on a weekly and keep it hold up there, then we could eventually make it to 100. But that's a longer term swing and not a shorter term swing. Not even going to bother with the options. It has like 3,000 contracts traded today in total. Doesn't have weeklies. They're junk, right? You want to trade this to stay on the stocks. And yeah, there you go. And just get that posted. And all right, so we had a couple of topics today. Some may take a little longer than others. The There was a really good question about dividend stocks, and I know that I've had this like run around the racetrack. I felt like one of those race dogs that were just chasing the mechanical rabbit when I first tried to get into the whole dividend game. Because, man, on YouTube, they make it sound so good, and they, of course, line you out with some stocks, and they have, just they put a lot of effort into it. Let's say that, and it's worthless. Most of those videos on YouTube that go into dividend talks, they'll point out the worst trash, and they all seem to do the same names. It's like they're in agreement. So for me, I like to lay back a bit into some tried and true things. There's dividend ETFs. The idea behind that is that all the work has been done for you and that you can just collectively trade that single ETF. That may not be exactly what you're looking for, so we'll go deeper than that. But from a really generic starting point, if you want to start getting into the dividend world, you could focus on those dividend ETFs. VIG, which I thought was the perfect ETF symbol, VIG. Then we've got the iShares version, DVY. Schwab has one, and believe me, these are not all of them. There are so many more dividends out there than this. But Spiders has one, Vanguard has one, and of course, I'll put this in the chat later so you don't have to go hunting for them on your own. So there is that. And within those, because they are ETFs, and ETFs are a basket of stocks, if we were to open that basket up, we can see, hey, what are the companies that make up that ETF? Because if I'm looking for good companies to do a dividend portfolio, then maybe the names that are in those dividend ETFs would be good dividend names to trade on, to build my own portfolio. So I grabbed the top 10 out of the dividends that I just listed, and you'll notice after a little bit that they overlap, that some names you find in one ETF, you'll also find in another ETF. That makes sense, right? Because if it's a good dividend name, it should populate in multiple dividend ETFs. Things like Altera, which is one of those smokers companies, AT&T, Verizon, Coca-Cola's in here. But where it gets a little weird is, generally speaking, we want to have value names, and growth is a little riskier than value on average. But when you get into big names like Microsoft, it has a lot of growth characteristics. It has a lot of value characteristics, but it's in there. We've got a large range of sectors. So you've got energy, retail, technology, and that's good because you want a lot of diversity in the portfolio. You don't want to be too heavily concentrated into one area, because even if we say, well, this is my dividend portfolio and this is my basket for the dividends, we don't want that to be too heavily concentrated into one area. On all those YouTube videos, it really seemed like they were hitting REITs a lot, those real estate ones. So try to diversify. If you read a lot of the textbooks, they'll say that you want to keep it around or less than 25% of your portfolio or your dividend holdings within each sector. So don't exceed that level. Nobody is suggesting you have to go up to the 25% mark. You just don't want to exceed that value, right? You don't want 80% of your dividend holdings to all be in one industry or one sector. So, of course, I will share this list too. But if we just do that, we end up with a really good list of stocks. And we know that these stocks are good dividend style stocks that we would want to use as a dividend portfolio because, well, they came from the dividend ETFs. A lot of that homework that we would need to do has already been done for us. And then when it comes to dividends, what are some of the qualifications that we would want to look for if we wanted to go shopping around on our own? Maybe we don't want this because it's old school, right? There could be more modern names. Um, Maybe we just want to go our own way. So, what else could we do? Well, one of the criteria when it comes to dividends is how long has the company been issuing dividends, and have they stopped doing it recently and just started back up again? Do they have a history of continuously elevating that dividend every year, or has it been stagnant for a long time? And they've got these two names that are really popular: dividend kings and dividend aristocrats. So, with the dividend kings, we're looking at companies that have increased their dividends for at least 50 years and they didn't miss a year. They did it every single year for the last 50 years. If we're looking for consistency, that's a pretty solid approach, right? 50 years, that's pretty amazing. The dividend aristocrats, on the other hand, have increased their dividends for at least 25 years consecutively. They haven't missed a year, 25 years. And again, that shows stability and it is consistent. So obviously, if the names that you're looking at aren't in that list, then they're not meeting that 50-year goal or 50-year benchmark or the 25-year benchmark. But that doesn't mean that they're not possibly a good dividend name. It's just another criteria that we can use. So we can go and we can like ask ChatGPT or one of the other AI assistants out there, hey, what would be good qualifications that I could use for a checklist on trying to figure out if a company is good or not. You can go that route, you can. But what's cool nowadays is you don't have to ask for the qualifications and then go check things on your own. You can just give the name that you're interested in to the AI and have it do all the work and say, hey, is this a good dividend name? And if yes, why? If not, why? And it'll break it down for you and it'll do all the work. Either way, it gets the work done. So there's different ways that you can do this with diversifying your holdings. We talked about that. You can do it by the number of stocks. You can do it by how much of your portfolio is in one sector or another. Um, they always recommend, if you're running a dividend account, to compound those returns, continue to reinvest the dividends. So, some people, especially the ones online, they talk about living off their dividends. Wow, it sounds great, but you would need a really big account that's providing, these massive dividend returns to just straight up live on the dividends. And while I'm not going to say that that's impossible, I would speculate that it's probably outside the realm of what we have here in the community for account sizes, right? So a little bit of a hypothetical maybe on that one. So just reinvest them. If you're trying to grow a dividend account, grow it. When you get your dividends, reinvest it. Continue to grow. Consider reviewing periodically, and you can choose when. I used to be pretty strict on this and I was doing it quarterly. Now I tend to do it more when something is changing. If we, went from raising rates to cutting rates, I might go in and reevaluate. If we do an FOMC and I am hearing different language or things are getting a little shook up, I might go in and reevaluate. So I'm not so consistent now on a specific time frame, but I used to be. And it's on you. If you're comfortable with what you have, you don't need to review. You know, really, there's no wrong way to go. I do recommend reviewing what you have from time to time because time gets away from you. It just seems like you blink nowadays and a whole month went by. Time is flying. So this is the easiest approach that I could ever recommend when it comes to dividends is just start with the dividend ETFs. And if you want to broaden your horizons from there, open those ETFs and look at the holdings in them. And then if you want to go even farther than that and you're individually picking companies out on your own, ask AI to evaluate it as a dividend play, and it'll give you the feedback on whether or not it would make a good one or why it wouldn't. And then, you can make an informed choice on whether or not you want to add it to your portfolio. It is worth noting that the companies, at least the ones that I play, I do not specifically go hunting for a specific yield, and I don't specifically go hunting for things that are in a certain sector unless I feel that I'm missing something in my portfolio, right? Like if I'm missing staples, right? I might go hunting for staples, but I won't hunt for a company in staples strictly because of its dividend. It needs to be something that I like, a company that I understand, and it needs to have a chart that's not just continuing to bleed to the downside just so that I can get that dividend, right? That generally doesn't work out because they're not going to pay you more in the dividend than you're losing from the stock continuing to fall, and you're just going to end up losing more money. Short duration, short term companies go through a little bit of a crisis from time to time. They'll have a bad earnings or whatever. I mean, take Walmart right now. They had great earnings. They mentioned that because of all the tariffs and everything else, that they're concerned about the next earnings, and they didn't want to paint a really rosy picture and then be able to miss that forward estimate when we got there. So that they didn't paint a rosy picture. And the market said, oh, well, we didn't like that forward estimate and smacked them down. Okay, but Walmart's still a good company. And it's very likely that when they do get answers to this tariff situation, they'll find a way to resolve it and they'll continue to make money. So, sure, it's not really looking like a great buy at the moment, but I wouldn't consider this some trash company that's just burning to the downside, right? So you got to evaluate the company beyond more than just, hey, what's its dividend? If you like a company and you have a list of them, this is where dividends can come in handy. Say I'm looking at Staples and I've got 10 names and I like all 10 and I need to sort it down. Maybe I just need 2 out of those 10. Well, I might start looking at the dividend at that point and it could lean me towards one versus the other because of that dividend. So it just becomes an additional metric in the function process rather than being the entire process for me when it comes to dividends. No wrong way to go, right? But I built a watch list of those names. I just thought that that would be the easiest way to share it. And I will turn my document into a PDF. I'll share that in the chat so you guys will have my research behind it. And I think that would be the easiest way to go. You'll get the watch list with all the names. And as you can see, this is all those names. When we got rid of the duplicates and everything else, that's not that much. And this includes the ETF too, right? Those 5 or 6 ETFs that were listed there. That's not a huge list. So not that much work to go through and evaluate them. Plus, most of these names are probably going to be familiar, or at least say 25% of them. It's because Microsoft, Bank of America, Wells Fargo, right? Obviously, homegrown names, Johnson and Johnson, United Healthcare, Pepsi, Coca-Cola, Costco, Home Depot. So doing the research on these won't be too bad because they're already household names that you would recognize.
Yo.
What's up?
Not much, man. Just enjoying my NFE position. I think that thing might just start cooking. It did pay a dividend. I don't know if they still do. I'll have to find out.
I used NOV this morning for an example of this conversation that we were just having about dividends.
Hmm.
Rather than having to go through all the legwork to figure out if a company is a decent choice for a dividend portfolio, you could just reach out and ask AI, hey, is this company a good consideration for a dividend portfolio? And I did that with um, NVO, and it said, yeah, totally awesome. And then it gave reasons for it. And I was going to use that
Yeah.
in my example today. I'd have to scroll back to find it, but I think just redoing the question would probably be better. NVO had
I
a
like
great
MBO.
outcome. When I asked it, AI was like, "Yeah, dude, that's a good one." That was from this
E-
morning when you threw that into chat.
Even Gemini seemed to like that one.
Yeah.
Which I mean, it's not the best AI, but every once in a while I'll use it. I'll have to find out if NFE is still paying a dividend, but that one's like a freaking killer entry price right now too. So it kind of reminds me of the REITs in 2022, which
According to Seeking Alpha, NFE, New Fortress Energy, does not pay a dividend.
rats. They did, and they must have canceled it. Probably because they were down a little low.
Your NVO was good though from this morning.
NBO is nice.
Yeah.
I do like that one. Well, nonetheless, I'll still swing trade NFE. It's a great swing. Already breaking resistance at 10. It's at 10:06 right now, and flying.
Well, this is not. I thought I could just print this whole page. I guess not. I'll have to break it down, but I will put it in the chat for you guys. The dividend notes that I took. Basically, it just has the dividend ETFs that I mentioned, the top 10 out of each of those dividend ETFs, and then a very quick summary of what a dividend aristocrat is and a dividend king. So I kept it short and sweet. And then, of course, the NVO conversation. Use NVO as your test pilot. Just go ask one of your AI products if NVO is a good choice for a dividend portfolio. It should tell you yes. If not, then don't use that particular AI model anymore because it doesn't know what the heck it's doing. Simple enough. If you're listening to this 2 years from now, disregard that. Who knows what can happen in 2 years? All right, so one of the other questions we had lined up for today is options flows. And I thought this was a really good question because a lot has changed in the last 2 years. We have our classic old school stuff like black box stocks, cheddar flow, whale stream. Sure, still awesome stuff. Absolutely fantastic for individual stocks and companies and ETFs. We'd be looking at, the flow that they're getting, the trades that are hitting, the strikes, expiration, hitting on the bid or the ask, and we can use that very short duration momentum approach to trade those on an intraday basis and possibly even on a short-term swing. But this question went a little farther and was asking about the options data that we put in, especially say in the morning briefing. And that gets us into dealer gamma and all the dynamics that go with that. Call walls, put walls, zero gamma, volatility trigger. And why are we looking at it? Well, the AI would probably give a little bit of that, but when I tried, I was going to show you guys a little test run on it. It would get confused depending on which AI, so I don't know which AI models you use. Therefore, I would be cautious telling you to ask your AI on that one. But if you name a couple of the companies that do provide that, they all, the ones that I have, provide really great material that goes with their product. So, for an example, we have Spot Gamma, which is what I generally use in the mornings when I share the call wall, the put wall, all of that stuff. We're looking at it because it's evaluating the S&P and where the options resistance is at and the options support level is at. Where do we expect them to monetize their puts or their calls? Where do we expect to see volume come in and volatility? And where are the dealers positioned? How are the dealers going to behave to protect their portfolio? Remember, those market makers, they're going to take the other side of your trade, not because they think you're wrong and they're right, but because that's their job. If you want to buy a call, they'll sell it to you. If you want to buy a put, they'll sell it to you. But they got to cover their butt after they put that trade on. And they're not going to just assume it's going to all work out. They will hedge that. So they end up hedging a lot. Take something like the S&P where you've got millions of contracts traded a day. There's a lot of money at stake. They need to respond to the moves in the market, and we can try to guesstimate or have a better understanding of what actions are they going to take if we get above a certain level or below a certain level, because they will be in positive dealer gamma or they'll be in negative dealer gamma. That's why we want to watch it. The question was, where do we get this info? Where can we? Now, there's more and more places that are offering this, and it's not cheap. I haven't found any of them that's free. Even the one that I share with you guys, you're getting it because you have a subscription to the Bullish Bears. So it's costing you, it costs me, it costs everybody to get this data. It's expensive. Spot Gamma, by far, is the best one I've ever found. Now, there's other companies who are offering some, just a little bit, like a small taste of it. Traditix is just getting started into it. Trading Volatility is another one. All three of those offer dealer gamma and GEX levels. There's also Mentor Q. I don't have their website in this list, but that is another one. All of those will do dealer positioning and offer the call wall, the put wall, the volatility trigger. And on a day-to-day basis, we can look at those levels and try to figure out where the dealers are and what they're going to need to do to defend themselves if we break or below a particular level. Oh, awesome. Unusual Whales offers GEX levels now as well. So that's another one.
Sweet.
I didn't know that. Thank you. More and more companies are offering this, and when the data gets cheaper, you'll find more companies doing it. And the more companies that do it, the cheaper it will become, and you'll find more companies doing it. It's a great circle for us, right? The more data, the more traders, the more data, the more traders. It's perfect. It's a great circle. Now there's classic companies like black box stocks. I don't go there anymore, but they are the like they're lifted up as the beginning of all of this. And I can't say that they are or not, but when I think back to who was leading things back in the day, they're the only ones that I can think of. So maybe they weren't the first, but they are certainly the legacy company that I remember or that I think of for unusual options activity. I would be surprised if they don't have GEX yet, or if they don't have it coming in soon at some point.
Yeah, I was a member over at Black Box for several years and really good moderators over there. Expensive service, but I was back there when they had like 5,000 users plugged in every day. That was back in the GameStop days as well, or immediately following it, when you had all these kids with a lot of money. um, but it was different because they really spent a lot of time teaching how to read order flow, and competing competitors at the time were like Cheddar Flow, um, and Unusual Whales. The advantage that Black Box had back then is they had a unique way of interpreting the order flow to kind of see bullish, bearish, stuff like that. And their platform was built to hunt this kind of stuff down. Um, but also, a lot of their options, though, were 60, 90-day trades, and you'd have to ride that trade. It'd be green, it'd be red, it'd be green, it would be red. But the theory, of course, was that the big institutions are placing these orders and they know something we don't. And so, we're just kind of riding on their coattails. Now, to be honest about it, though, not all trades worked out by any means. And I think they showed an average result of, um, oh, let me think, because they used to post what their running tally results were. And I mean, it was positive. Um, but I think they had something like I don't know, 75% success rate if you could stand the ride. And that was the problem, because a lot of those 60-day options would be a roller coaster. And you just had to just put the trade on and, forget about it and just check on it period. You couldn't watch it daily. That was the thing, I guess. You couldn't watch those kind of trades every day.
It was a very robust platform. I remember that. You could turn the knob and dial in every aspect of that platform. And I remember that because when Cheddar Flow came out, one of their advertisements was, "We're not black box stocks. All you got to do is just log in. We'll handle the rest." Right? They had really no settings that you could change on Cheddar Flow. You just logged in, it gave you what they were finding, and that's it. You didn't turn the knob on anything. Black box stocks, you could dial that thing, nerd out on it all you want. But if you didn't know what you were messing with, then you could end up breaking it, have to reset it, put it back to where it was at the beginning. You had to know what you were doing to play with it, for sure. These dealer levels and the different tools that are out there, most of the companies that offer GEX offer really great background to it. I logged into Spot Gamma and they have a support center. Even if you're not logged in, you can use this support center. So if you just want to, get educational material from a dealer Gamma provider, Spot Gamma Support Center has really great stuff and it's searchable. So if I just go in and type in something like the put wall, then I get the put wall, and I can find information about what is a put wall, what's zero gamma level, what's dealer gamma. It's great that we can go and we can get these sort of answers from the horse's mouth so that it doesn't get lost in translation. I find this useful when I try to answer people and I'm talking over their head using words maybe they don't understand, or I'm using advanced tactics, advanced language that they haven't got to yet. And they're like, hold on. I just learned what a put was yesterday. You're talking over my head. I don't understand what you're saying. They have material that kind of just dials it back nice and easy. And, it's a slower pace. You don't have to try to absorb it all in one day, and you can go back and just work through it nice and easy. I'd love to put together something like this for the bullish bears and have, our own dealer gamma library, and it's just a work in progress, right? Because it's a lot. And this stuff is really over the last, 3 or 4 years is where it's really blown up. I want to say after COVID is when I really started getting into it. And it wasn't like it didn't exist before then, but you see it more now. And the more people that participate in sharing the information and talk about the information, the more common it'll be to everybody out there. So it's a good resource, Spot Gamma. There's other ones that I've listed. Trader Volatility is a company that has dealer gamma material. I post a little bit of their stuff in the morning, mainly the flip point. So if we go in and we look at the stuff that I share every day, we'll just scroll up to before 7:30. I share 2 pictures, and one of those is Trader Volatility. It's this white one here with the uh, flip point. Every day we can evaluate where the zero line is from moving in between a negative dealer position into a positive dealer position. So we can look at where's our current price? The SPX was at 57.38. Where is it going to flip? 59.72. Well, it's very likely we're not going to flip today and that we're still in negative conditions. That's simple enough. And we can see that I was running it for today. It was a 0 day. I could have adjusted the settings and looked farther out, but we were looking at if we move higher or lower today, where's the flip point? Then the other one that I share is the spot gamma levels. I've started doing it this way rather than just sharing a single day. I have yesterday on here and then I have today on here. That way you can look and say, what was the call wall yesterday? 59.13. Okay, what's the call wall today? 58.39. Okay, it moved. They rolled it down. I started doing this because I had people say they don't read the founder's note because it is too complicated. By the way, if you're reading the founder's note and you find it complicated, go to their website and go into that resource that I was just showing you. It's free. They don't charge you anything to look at their glossary and to read the founder's note and ask it questions there in the glossary area. So that's why we look at it. We look at it because it can affect the S&P and the NASDAQ on a day-to-day basis, and we want to know where we change from a negative to a positive dealer gamma. Then another one, which I like this, and as a learning tool, this is a good way to go. Using AI to help you forecast the market. Now, you can take this a lot of different ways. You can just straight up get the forecast from AI, or you can get assistance from AI to do your own forecast. A couple of different ways. So I started working on this from the idea of if we were going to use AI for trading, what could we do with it? And we're not talking about, coding our own stuff and teaching an AI model. Uh, we're talking about what kind of prompts could I use? And can we do things like the macro backdrop? Yes, we can use macro to micro prompts. And I asked it, give me a list of prompts, ones that are popular, that are already being used by others, And what would it be used for? Use case, setting the stage for broad investment strategies, anticipating macro shocks to financial systems, understanding monetary policy and its ripple effects, linking raw materials to economic cycles. So it gives you the prompt, you adjust it for your needs, like gold, oil, copper over the next year and their influence on related industries, and you ask AI, it gives you the feedback. So that's macro to micro, but we can also do Forex and Forex specific forecasting. We can get prompts for that. We don't have to think of the prompt, right? That's kind of what I wanted to show here. You don't have to try to figure out how do I ask AI a question so that it will forecast FX markets. I can ask AI, hey, what is the prompt that I need to use to ask you about forecasting FX markets? It'll give it to you. So we can do that with stock. We can do it with dividends, as we was talking about earlier. And it'll write out the questions for you. Ask these questions, and this is why you would ask it. You would use it if you're trying to figure out, X, Y, Z. It's going to give you answers, and in those answers, it may give you more clues on what you may want to look for next. Maybe you ask it about the dollar, and it starts talking about gold for some reason. Of course, if you've been digging in the macro concepts, you'd already understand why it would be talking about gold. But suppose that surprises you. Oh, wow, I asked about the dollar. It's talking about gold. I guess I need to ask about gold now. You could follow up questions and start asking about gold, which may bring up oil for some weird reason. And now you're asking it about oil. By the time you're done, you've got this big picture idea and a forecast on what's going to happen next based on the current conditions that it found. When it comes to using AI, though, it will matter on what you're using. It needs to have the ability to go out, gather its own information, and make an informed decision with a forecast on what it thinks is going to happen. So if you're using some AI that's still stuck in 2023 or early 2024, and it doesn't have current information, and it can't show you its reason model while it's trying to figure out the question that you asked, you probably don't want to try this approach. Grok does it. That's the AI from Twitter or X. Copilot can do it a little bit. I'm not really impressed with it. ChatGPT can if you're using the latest model, which I think is what, 4 now or 5. I don't keep up with ChatGPT, but its most modern version can do it. So it said there's one called ClickUp AI. Never heard of it. I don't know anything about it. It mentioned it, so I wrote it down. If I was doing it and I didn't want to use Grok, I would probably try the newest version of ChatGPT. It has to have the ability to perform the analysis. And the easiest way to know that is to tell it, show me your thinking process while you do this. And Grok does that, so I know what it's looking at. So you can get prompts and then just save those prompts and use those to generate a forecast of current market conditions and where they think we're going to go for next. You can even use it to derive the triggers that you would look for to have a new leg down or a potential recovery and run back to previous highs, all from AI forecasting. It's pretty handy. What I like about it, though, is when you get the answer, if it gives you things that aren't already in your list of things that you've saved for prompts, you can get new prompts based on whatever new thing that it was talking about that you hadn't thought of before. So it's teaching you, and then you can turn around and feed it back to it and get more out of it. I know that there's a couple of companies that have specific stock trading AI prompt models like this. I had the name of one saved for a while and I accidentally deleted it. For some reason, I think it's called Wilson, but I can't say for sure that it was Wilson, and I sure don't remember which company it was. I thought it was Seeking Alpha. It wasn't. but it's like one of those. Invest AI, Seeking Alpha, maybe it was Market Watch. I don't know. There is more than one out there that is strictly designed for traders. Perplexity and Julius. All right, I will add those to the list. Thank you. So for anybody watching the replay, this was provided within the chat. We're looking at other names that could be added to the list. I hate it when it does that. Let's
Are
just
you
fix that.
uploading this to YouTube right now?
No. Nope, but
Yeah,
I'm
recording.
recording it.
Gotcha.
Yep,
Cool.
I'm recording it.
Kidda.
I'm gonna get that YouTube thing figured out, but it was
Anytime. No worries.
a big day yesterday, and I just thought, nope, I'm burnt for the week.
Totally cool.
So that's quite a big list. Um, as I usually say when it comes to AI, if you're new to whatever one it is that you're trying to use, ask it things that you already know the answer to. Get some background on it. Make sure it can handle what you're about to ask it, right? Because they're not all equal, and some are just good at some things, and some are good at others. So experiment a little bit, and then even if you know it and you trust it, it doesn't mean that it can't make mistakes. So it's just like us. We can all make mistakes. I also asked it about platforms that are using AI. Trade Ideas has AI algorithms, TrendSpider, TradingView, Tickeron, MetaStock, StockStack. Some of those aren't familiar to me, but I mean, I've heard them, but I haven't used them. And all of those in some way have some AI feature or aspect to it.
Coming up on 3 o'clock, we have consumer credit change report coming out. Good. Yeah, that's a lot of money. Watching the projections. Ouch.
The U.S. put a put under crude in the last week, so it's likely we won't see crude going much lower. It turns out I think they're going to end up defending that 65 level after all.
Whose collar is that?
So it's from the Strategic Petroleum Reserves. The government says they're going to start refilling the coffers, so they're going to be defending $65 a barrel.
I thought we were supposed to refill it at $70 a barrel. That was the whole thing in the previous administration. They said that they dipped into it and they were going to refill it at 70, but then they didn't. So now we're going for 65. Is that right?
Well, we were at 65, and so anything above 65, they're willing to do it. They're not going to let it get to 65 and then do it. That's where the put is. No expectations that we'll go below 65 unless we just dip down. They're going to run it right back up if we do. We have a government put in place. It's the easiest way to think of it, right?
Where do we find this information?
Search SPR on Finance Juice would be a good way to see when the conversation started on it. I believe it was like 2 weeks ago. So we just bring up, I got Finance Juice here. If I just search SPR, which is Strategic Petroleum Reserve, I won't even spell it out. I'll just use the SPR, hit enter, and I scroll back. We can see late December, early January, we start getting into Trump talking about the strategic petroleum reserves and filling it up fast. He's like, get her done, right? Get in there and start buying it up. And then just in the last few days, here's the 7th examining options for easing energy sanctions. That's not what we're looking for. But yeah, there it is. DOE had plans 20 billion refill of depleted SPR after the Biden drain. March 7 from Zero Hedge 9:30 this morning. And the Secretary Wright saying he thinks it'll take about 20 billion to fill the SPR. So that he said that first, and then 20 minutes later they said, okay, we're gonna plan on spending 20 billion. So there's your
Not
put.
to sound political, but that was such a pointless bullshit move to drain that.
Well,
Ugh.
it's just the game, right?
Yep. I know.
Yeah, it was just a game to keep prices down to make people happy in the short term. It's peeing in your pants on a cold winter day.
Pretty much.
So
Just
I
very
wanted to put that out there because we were aiming for getting below that 65 level and actually holding below it, not just wicking down like we did last year. That would be a really big deal. Well, that's off the table now. We can still wick down
yeah.
there, sure, but we're not looking to hang out. That's done.
Even USO is rounding here.
Yeah. Now, on the other side of that, I don't think it necessarily implies that we should be, trying to run oil to the upside for a long play. And if we do, stay to things like USO. Don't assume that your, petro companies are necessarily going to benefit from this, right? Like Exxon, Chevron, those guys. Don't assume,
Refiners won't do it. Going
right?
to be suppliers.
Yeah, and so you're better off doing the USO or the crude futures if that tickles.
I could. I wish there was a leveraged ETF to wheel trade on that, but there isn't. There used to be, but there isn't. Was it like UGAZ or whatever the heck it was? One of the ones that got delisted not too long ago.
So I definitely wanted to get that out there because that seemed like something that we're all going to be dealing with for a while now. And they're not going to do it in one shot, right? They mentioned that later. U.S. Energy here filling the SPR is not something you're going to do in one day. It'll take a few years. Not necessarily. I don't know if I agree with that, but it's going to take a while. Also, every Wednesday we get Petro report, right? So it's a Wednesday thing. You can go in and you can be ready for it.
It's still there. Gush, that's the one. I'll be right back. Let me put some math together.
I haven't heard a gush in a while. Well, that brings back some memories.
I'm gonna see what the natural outlay is on monthlies.
I thought you were going to get into like the crack and um, our Bob and all that stuff.
Well, it'd be fun, but I'm like a vicious hunter of premium lately.
Jeremy, I just dropped two in the chat for you there.
Okay.
But so we need what? Crack, frack, and smack, something like that.
Something like that.
Yeah. Well, I'm already long natural gas, but infrastructure. So like NFE is a perfect infrastructure swing as far as I can see. But for oil, Gush might have enough premium. Let me go look into it.
Oh, wow. I just lost one of my monitors. Oh, that's weird. All right. As long as you guys can still see my screen. I was
Yes.
I was chatting with somebody in DM and I clicked on the chat to talk to him and everything went black. Oh, I broke it.
You are not intended to reply to that.
Yeah.
Not supposed to reply. That is the gods telling you.
They offer subtle hints sometimes.
Closed my day trade on VIX puts. OILU. I'll get into those too.
All right, so here's commercial short positions. kind of provides a little insight. I put that in the main chat. And a little bit of backdrop on all of this, right? We got Scott Bissett. We have CFTC positioning with, then we got Japan, then we got the whole macro global oil demand issue. This is his 3 million barrel oil supply needs that Scott Bissett was talking about the other day. The 3% will largely come from natural gas liquids during his term, and he thinks that's very doable. Then for crude, CFTC positioning on data clearly shows price action mostly is a tariff frenzy. And that was all about traders moving to the sidelines, getting the heck out of the way, evidenced through long money manager specs with liquidation and only minor organic short growth, surprisingly commercial short liquidation, suggesting producers have zero interest in protecting revenues at these levels. Yet another signal that CL in the low 70s represents value. Uncertainty is difficult to position for. Wait for the market events that clarify and then trade on those. So that's a little background on it.
Didn't Gush used to have weeklies? It's only monthlies now. There's got to be another one.
Trump also announced potentially a joint venture to sell oil to Japan. Japan controls the global nat gas market through their shipping assets, so they can take a lighter U.S. crude oil. There's a lot of changes going on.
No options on OILU. Not trying to interrupt. I'm just trying to think out loud.
I'm reading.
Information overload. Sorry, guys.
Seasonality on gasoline does not support a short trade. ULSD is holding on weather, inbound cold weather into Texas over the next 10 days. That was from Tuesday, while gasoline is undervalued and poised for a seasonal strength coming in through February. So, that started in February. So definitely don't want to try shorting gasoline crack seasonality. May through December is the weakness. December through May is strength. And I posted that in the chat too. That's the second chart that I posted. So it was looking really good. Like we were going to get a big breakdown in crude. Finally getting below that 65 level again. But nope. They're going to be, I don't see that happening now. So one thing that you could really do with this is short puts. You can spend that credit on something else. I don't know that I would necessarily want to buy calls with it, not in crude, but you can use the money to do something else with it. Or you could just sell it, right? Who cares? Sell some puts.
I use it to offset my cost basis on my longs.
Yeah, there you go. Just straight up buy some USO stock or something.
So between Gush doesn't have enough volume, so it sucks on the monthlies. It's only like about a 3% yield on outlay. But UCO almost makes the difference if you go at the money, you get about 5%. Which isn't bad for a $20 equity. Then again, MSTU is already kicking ass, so I got some funds in there.
Signet, did I tell you about my adventures with Thinkorswim yesterday?
No, what happened?
I was in an MES put, and which normally I don't like options on the indexes because you can't set a stop on them. But anyway, you can set a stop limit, I guess. But anyway, so it was floundering around. Green, red, green, red. Finally decided I was going to get the hell out of it just because I got tired of messing with it. So I had 8 days on the trade, but it was floundering. I closed the trade basically at even for a scratch. Thinkorswim did not close my OCO.
Oh no.
It went up and it hit my take profit, which was still open, which I obviously could have, anyway, and immediately put me short on the put.
Oh boy.
Completely naked put on the MES. And I didn't realize it at the time. And so I come back a little bit later, and all of a sudden I realize I'm still in a trade. I'm like, what the hell? Fortunately, it floundered around, and I got out of it at scratch. But so the whole trade, I made maybe like $8 on it. But I was like, I've had nothing but trouble with Thinkorswim lately. I don't know what is going on with that. But yeah, when I click close order, normally it closes out any open OCOs with it as part of that transaction, and it didn't. It left the OCO sitting wide open, or the take profit anyway. That existing limit order just left it wide open. I was like, dadgum. I couldn't believe it.
That had to be scary. I love the options on the futures for the ability to sell them naked. That's one of the reasons that really that's the only reason I trade the options on the futures is so that I can sell them naked. The MES is one of my favorites, and you can do it with, about a $5,000 account, maybe a little more, for some comfort. But you don't need, when for anybody listening, if you're thinking, oh wow, a short MES that must have needed a really big margin. Nope. Now, if I went to the ES, yeah, I'm gonna need, like probably
10x.
40,000, yeah, $40,000 account. But crazy thing is, the futures options, you can sell those naked way cheaper than you can do SPY and SPX. Those are crazy, insane prices. But for the MES and the ES, especially the MES, a $5,000 account, you can do options in here. And you can go pretty far out of the darn money too. It's a really good product to trade, and it's something that I lean into when I'm uncertain about stocks. Like when my themes are out of play and I'm waiting for the market to get off its butt and finally break down or break out. That's my go-to. That way I still keep engaged in the market. I'm still moving money. I'm engaging. I'm trading. Because otherwise, I have no, what's my incentivication to come into office if I'm not going to trade, right? And then I was like, I might as well watch YouTube or something. I'm gonna get bored. So I want to trade. I will lean into the options on the futures. It is a really great vehicle.
Well, it definitely has got a lot of advantages there because, for one thing, it's 23 hours a day instead of
Yes.
9:30 to 4.
Yeah, no
Um,
PDT.
no PDT, and but it irritates me that, I guess you could do a stop limit. I hadn't explored that. This trade actually was supposed to go on Trade Ovate, but I wasn't thinking about where I was at the time, and I put it on Thinkorswim by mistake. And I really just need to empty that account so I don't make that mistake again. But it just really just I was so bent out of shape when I saw that happen. Worked
Yeah,
out fine, but I was really bent out of shape.
while it's a great product and all that, I completely skipped over how scary that would be to come in and into the office and realize, oh shoot, I'm in a trade. What the heck? I mean that
In there.
scares me. Man, that scares me. Thinkorswim is really cool how you can do so many things differently. If you want to use buttons, if you want to use the dome, if you want to trade from the chart, if you want to trade from the options chain, like you got all these choices. It wouldn't hurt to shop around and try one of those different options, right? Like it's just a different way to perform the same action, getting into a trade, getting out of a trade using pre-built bracket orders when you can. Not necessarily applicable for futures, I know, but there's a lot of choices on how you can execute different behaviors on Thinkorswim.
Oh, Thinkorswim can do just about everything. It's an amazing. Well, I mean, it's old as dirt, but um,
Me too.
you know, it's just I don't know. For me, and I guess it's something on my end. I guess I don't know, but in the last 2 months, maybe 3 months, I've just had nothing but pure quirkiness. I've had them on the phone, and we've gone over stuff, and they can't explain, give me a good rationale. I've talked about the fact that there was some lag in my platform, and we attributed that to a bad internet router between me and them. So it wasn't their fault. It's not my fault. Somebody in between us. But some of this quirkiness, like what was it? I was in an option a couple weeks ago, and I added a second option. I added to the position when it started moving in my favor. And one screen said I was in one option, another screen said I had two options, and stuff like that. And it just got totally out of whack. And I'm like, what is going on? So I don't know. Yeah, my options are all moving over to Tasty, and I'm like,
You
that's
know,
just got to go.
I use Tasty to trade futures too, but in a limited way. I don't want to buy the full data package on Tradeovate. So I don't want the $42 top of book every month, full book every month. And I don't want the generic $12 top of book because to me that's worthless. I want to see the book. So if I'm going to trade gold or volatility, oil, I trade it on my Tasty account. If I want to trade the ES and the MES, I do that on my Tradeovate account. When it comes to options on futures, I do all that in Tasty, all my options. Um,
Well, it's funny you're talking about the book, L2 book, because I was noticing I had Bookmap up the other day just looking at it, and while Kevin was streaming, now Kevin pulls from who's he pull this the big Bookmap. Um,
CMG,
eh,
CME,
no, um, oh gosh. Anyway,
Rhythmic.
Rhythmic.
Yeah, Rhythmic.
So Kevin subscribes to Rhythmic. Well, I'm on Tradeovate L2, and his Bookmap was 10 times more detailed above and below current price action than mine was pulling from Tradeovate.
Same.
And I said, wait a minute. And I got to looking at this, and I pulled up the DOM and stuff, and I'm like, I'm not seeing the same depth above and below price, current price, that he's seeing. And I thought, now something ain't right here, um, but the problem, of course, Rhythmic's over $100 a month or something like that for the full package. I'm like, I don't want to pay that. And I don't know about Tasty. I know, of course, Thinkorswim doesn't give you any L2 worth 2 cents, but I was just some really weird surprises to me lately.
I like my jigsaw. If I want to nerd out and get deep into the futures flows, I turn on my jigsaw. Otherwise, when I turn on Tradeovate and I've got full book, the dome populates. I can see what's going on, and I'm good with that.
Yeah, that's all you need.
Yeah, but I mean, don't get me wrong. I love my jigsaw. It's fantastic. And when I do want to nerd out, I've got a lifetime license, so it doesn't cost me anything to go in and fire it up. I can see everything I need to see, and it's using my Tradeovate data, so I don't have to buy data from Jigsaw. And nice.
It looks like we just gave the consumers more rope. It went from 14.5 billion to 18.08 billion.
Okay. Well, and we know what happens when you give consumers more credit.
Yep.
Hey, did you see those
Short term.
car delinquencies are up?
Oh
People
God,
paying on
yeah.
their car and credit card is up. There was something else that had me concerned the other day. I was seeing it there. Oh, there was there's been talk about the consumer slowing down, blah blah blah. They're just running their mouth because when the numbers came out, spending is they're still spending. Now how they're spending credit, right? They're not spending their savings because they don't have any. They're spending their credit, but spending was up 2% in January, right? When we
Yeah.
got the February numbers, it didn't slow down; it sped up.
Yep. Even at like 28.9% interest, it's ridiculous.
Oh, I know. I know. I set my credit card to pay off every month, but it still carries a balance because it only pays off, the previous cycle, and anything inside of that, forward of that cycle is carried. And I've been noticing my forward balance is getting bigger.
You
Uh,
want to try something fun?
I just paid the whole thing off completely to zero the other day just to reset everything. But what's that, Jeremy?
Pay it off in weekly increments, but make sure it's paid off by the third week every month. If you want to see your credit score go insane. Like I'm sitting at an 845 credit score, and they're offering me like $300,000 limits. I'm like, man, that's tempting, but no thanks.
So you're saying pay it off
So pay it off in 3
weekly?
weeks, but make weekly payments. It's hilarious how fast that boosts your credit.
Really? I
Yeah,
didn't know that. Okay.
that is like a very little known trick.
I usually have my jigsaw running on my other computer. I went to turn it on this one, and I'm like, why am I looking at old stuff? I've got Z and U.
Oh
What the
damn,
heck? That's because I
that's
Back
awesome.
in the day, Sonny, we used to be on the Z contract.
it's been a
Yeah.
while since I've loaded Jigsaw and Bookmap on this computer, so I had to go fetch the
Uh-oh.
contracts.
Having day volume issues on Tradeovate all of a sudden.
Well, I like. I really, 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 really want to like Jigsaw. I've tried it so many. The thing that gets me is I do like book maps. Um, Jigsaw moves around on the heat map more, or the Vista. It moves it around a lot more, and so it's a different approach because it stays more focused on where price is right now and moves around with it, and you can't shrink it vertically to see what happened so much in the past, like you can with Bookmap, which I kind of like that feature. But the Jigsaw is so much more customizable that um, so I don't know. I'm still torn between the two. Um, but the only thing that I've really used Bookmap for lately is looking for order book imbalances. That is really telling a lot of times when that happens. When you see like there's 600 contracts on the ask and 1,000 contracts on the bid side, you're like, oh man, serious imbalance here, which kind of, I've tried to trade that before and I've had some mixed results with it, but it was kind of fascinating to mess with.
I'll tell you, I've got a client who, you guys remember Iron Beam?
Oh yeah.
So
That was before me. Yeah.
they've they're still around, and they
Yep.
have integrated into other things. And a client sent me a picture. We were talking, and I like this picture is fantastic. Let me look at the. And so we zoomed in on it and we looked at it. I'm like, you know what? I'm going to go over and try that broker out because they've got such great material on there. So I go over and I go to sign up, and they're like, oh, yeah, you got an account. Just go ahead and log in. Like, I didn't realize
Oh,
that.
it's a broker. I thought it was a user you were talking about. It's a broker. Okay. No, I don't know them.
And so I went and I reached out to them, and they're like, yep, you're all good. Just, fund your account and get right back with us again. I'm going to grab the picture and bring it over. You guys can see it. It's impressive, the material that's on here. And if you're shopping around for a broker that has the tools kind of like what we're talking about, jigsaw, book map, that sort of thing. This is a picture of the dome, right? So just, we're not even talking about like really fancy charts and all that stuff. I'm just, well, let me open this first to make sure that there's nothing in here that, because this isn't my picture. I just need to make sure that there's nothing that would point out who it actually belongs to. Real quick, just take a second.
Yeah, we know you're trading your grandmother's account. You're not fooling anybody.
My daughter's account. All right, let's see. Yeah, one little spot. Just hide that. We're good.
There are certain bits of information that are definitely more important than others. The conversation that Kevin and I are having here. But you still got to pay attention to some data metrics. They will move the market, even when it says they're not that important. This is important for retailers. It means the consumer is going to drop more money in retail. That's going to be optimistic. Indexes run on those.
All right, the picture I just put in the chat is from Optimus Flow, and that connects to Iron Beam. All right, so I'm going to share it in the live stream so you guys can see what we're doing. I'm going to just zoom in up at the top. And remember, we're just talking about the dome here, right? So we're talking about trading information, not a chart, candles, lines, all that stuff, tick chart, time chart. No. Just the dome. You got your buy, your bids, your price. So your normal dome, the sell, but then it starts with what's the trade imbalance in percent form? Your volume versus trades, so your TPO versus your volume profile side by side, your delta, cumulative delta, and then your buy sell volume. All tucked together, nice and neat, clean, color arranged with the red and the green. So, the positive, the negative. This is awesome.
It's like breaking down the day volume and the DOM in individual parts with both sides of it, retail and institutional.
How
I
cool
guess
is
I'm
that,
missing
right?
something here. You're saying though that this is Optimus. It's a pop-out window or something from the Iron whatever,
So
or
this company is owned by Iron Beam. If you go to, join Optimus Flow, you're actually getting into a broker called Iron Beam, just like
I like
Tradovate is
Optimus,
owned
by the
by
way.
Ninja.
Right. Optimus isn't bad. It doesn't have the best like 5-second data that I'm used to with Tradovate, but it's the next best thing.
what's the pros and cons of Iron Beam as a brokerage?
When I used them, their charting was not very great,
No.
and what made them awesome is they had no data costs. And I was like, I can put up with your really sorry charting for zero cost. That's fantastic. And then they were like, oh, we're going to start charging for data like everybody else. I'm like, see, now you're not fantastic anymore. Now you're just
Yep.
another broker like Tradovate, but you've got worse charting than they do. And see ya. And I was done with them.
Pretty
Also,
much.
their paper accounts, you get like 1 week. And if you want another paper account, they'll give you as many as you want. You just have to keep going back every week and saying, hey, I want my paper account. Okay, we'll turn it on. And you get a week. And then, hey, I want my paper account. Every time you get a new login, you get a new password. And that's just crazy frustrating because then you got to put everything back how you had it organized because it's a new account, new password, new username. I'm like, you know how frustrating that is, dude? So there, little things like that are frustrating. But if you have a broker where you can do your paper trades, because I like to do drills, I like to play around with the buttons, uh,
Mhm.
use different order tactics to get in, get out, practice fading techniques. I want my paper account. So I didn't like having to go through jumping through hoops every month to keep that paper account set up. That's the pros and the cons. It filled when I wanted to fill. It got me out. When you need help and support, dude, it's a guy on the other end, and he's sassy. He's fun. He's just. It's not like you call and talk to a robot. You get him. He lives in Hawaii, so his time frame's a little off. But other than that, you got one on one. And that's big in today's world where everybody just wants to pawn you off to talk to the machine.
Right.
Well, trust me, I've talked about trade evade support before or lack thereof.
Yeah.
Um, but um, have you ever had to do any tech support with Tasty before? Have you ever had to call them? And if so,
Absolutely.
what was your what was your what's your thought with them? Were they pretty lickety split like Thinkorswim would be, or what?
It was awesome. It was my first attempt to even deal with them. I still had um, my day job's 401k, and I wanted to take it from them because I wasn't working there anymore. I was working on my own, and I wanted to manage my own funds. But I didn't want to screw that up, right? I didn't want to get taxed for it. I didn't want it to be seen like I was withdrawing from my 401k. And so I needed to get it into Tasty, and I needed to make sure I didn't screw anything up. So I called him and was like, how do I get this done? When they answered, it was a person on the other end, and he was just like a mid 50s Joe Schmo guy, and was like, "All right, well, let's get you set up," and walk me through it step by step. Yeah,
That's awesome.
yeah, he took his time. He explained things in language that I could understand. He answered my questions, answered questions I didn't even ask yet. He just beat me to it, knowing that I was going to ask that sort of question, and handled the whole process. It was excellent.
Good, good, good. Yeah. I mean, that's something I've harped on with a lot of people before is there's something to be said, pay a little bit more for a good tech support because when you need it, you will be glad to pay whatever you need to if you need to get somebody on the phone.
Yeah, that's the thing about trading. When everything goes to hell, it goes to hell bad, and you just really need someone on the other end.
I had to threaten to sue UUP to get them to do anything.
I was thinking about that position all weekend.
Yeah, they fixed it now. They elevated my call to the fund manager, well, the guy who assists the fund manager directly. Like, oh yeah, no, that's a big mistake. You're right. We got you. Oh, okay. Well, are you going to reimburse me for the amount of taxes I had to pay on that? Ugh. So I'm still in conversation with that part of it, but the other part is they've nullified my record of having 4,000 shares with them.
Most of my experience when it comes to getting assigned comes from trading UUP. And I've
Yep.
had people say like, "Well, how did you learn so much about getting assigned?" Get assigned often enough, and you'll learn all
Oh yeah.
about it. And that's where I got most of mine is from
Yep.
them.
And I don't mind being assigned on equities and ETS. That's fine. But UUP is horrible. They have like the most asinine ancient computer system that's known to man, and they still run it. It makes lots of mistakes.
Is it competing with that 100-year-old light bulb?
Possibly not. I think it might be just not as valuable. At least the 100-year-old light bulb still works flawlessly. There's a one in the famous firehouse that's still operating, I think.
Yeah. It's even got its own UPSs and everything, so it doesn't go through power outages.
Yeah, that's pretty cool. Ooh, that was a nice liquidity grab, by the way. I think we're going to hit that 493 pivot one more time on QQQ, and then going into the close, we'll see if we can break it. So far, we've been nice and bullish after that V bottom right to that key pivot and then some.
So
That was a little scary.
we have some issues coming up that are worth keeping on your radar. The government shutdown threat
Yeah,
is one, and I've got a sneaky suspicion that they want to shut it down, and that they're going to let it shut down. So that's just my own bias. CD says ES is going to break out, so that's my own bias. I don't know, if we're actually going to get a government shutdown or not, but that's March 14, and it needs to resolve. Um, we have we had Powell talking today. I didn't get to hear what he said yet, but I'm assuming that he did not suggest cutting. But I've heard
okay.
a couple of analysts say a cut is coming this month. Well, we're having FOMC on the 19th. If they don't start talking about it and they just cut, the market's going to freak out and we're going to dump. You can't
Agreed.
surprise markets like that, right? We talked about this before. You can cut and tell the market that we were still above neutral, and they're just trying to get us back to a neutral state and let everybody know it's just a cut. It's cool. And the market will say bullshit, but okay, we'll let you. But if they don't say it and they cut, they're going to assume something's bad has happened and that they're cutting because something bad happened. And they won't let that ride. They'll dump. So
Start looking at one of my new favorite inverse ETFs, SKRE. That moment,
SKRE.
that call. It's low volume, but it moves. It's got enough to make your shares move. I wouldn't trade options on it, but
And so we have that threat, and that's an FOMC issue. So we don't know, are they going to cut or not? If they're going to cut, start watching headlines for Bissett and Powell and maybe all these other Fed speakers that have been chipping their teeth. Listen to see for them to start talking about we need to do another cut. They probably won't use the word need, because then that brings us back to, oh, what's wrong? Why are you cutting? Look for them to talk about we want to cut. We think we need another one to get to that neutral rate, that we're still in restrictive territory, blah, blah, blah. And that'll give the impression that they're just doing a general purpose cut instead of cutting because something broke.
there's another elephant in the room that I kind of tinfoil hatted this morning. What happens to the market if, and this is a big if Putin and Zelensky come to the table for a ceasefire over the weekend?
There is a news article over on Financial Juice that says Putin's ready to come to the table.
And Trump said
Um,
at this point that he's done talking to Ukraine because they don't seem like they really want to do anything, and he's going to
Yep.
lean in and talk to Russia more this weekend.
Yeah.
That was on Finance Juice too. At 1 o'clock, I think I seen it.
I mean, Trump is like a bull in a china shop on this. He wants this to go through. A lot of people seem to think that Trump is hoping to get some kind of a Nobel Peace Prize or something. I don't know. But I've also heard people say that Trump is really not concerned about the markets more than he is about, his agenda topics,
Right.
and letting the markets just suck it up.
Yeah, his
uh,
words today. He said, "I haven't even looked at the market. I don't care." And they threw Trump
Yep.
quote out right there. He said that was last time. This time we got to get this stuff under control. And one of the reasons he's cozying up with Russia is because of the energy cost.
We were
It's
just talking about that yesterday. We were saying, like, Trump 1 used the market as a scorecard. Trump 2 doesn't give a shit about the market.
Yeah,
And it's
not even
true.
a little bit. His
Nope.
goal, he has to keep his followers, and his followers
Yeah.
put him in there to fix this government issue before we run out of money, and everything goes broke.
Yeah.
And if he breaks enough of it in the front end, they'll come in, they being the House and and Senate, they'll come in and start making policy changes, but only unless something breaks. You know how they are. You can't get them to agree that grass is green.
Yep.
The only time they work is when something is in crisis mode. So what do? Put it in crisis mode.
That's it. And even engineers always perform best when their back's against the wall.
Yeah.
They're usually going to come off with, well, hey, that worked before. We'll just do that. That's the complacent engineer who's just like, whatever. I'm just here to make it work. But when you put their back against the wall and say, man, we need to come up with something now, their brain starts moving. It starts spitting out ideas and actually getting somewhere. Kind of a neat concept. You push complacent people too far, give them a deadline, light a fire under their ass, and they get moving.
Now, a monkey wrench in the whole situation is Germany with this big buy that they just
Yeah.
came out with, right? It's like they woke up the beast.
Yeah.
They're voting to change their constitution so that they can pour money into defense. They're about to ramp up, and all the money in the globe is headed into Germany. Well,
Yep.
you know how it is. What's it coming out of? We're talking about a massive capital rotation out of what, the carry trade? Okay, that's a given. What else? The Mag 7? Oh boy. It's already been flowing out of there since December 24. We
Yep.
can see it on TradingView. So if money's been running out of the Mag 7 since then, and we've all been looking for the Mag 7 to start to pivot and go back up. If it's all going to Germany, there's not going to be a pivot.
Good point. Not much rotation when there's no capital to drive it.
Yeah.
Well,
Hi
I
guys,
was looking
can you
at
hear
the
me?
S&P market, doing some technical analysis, if you will, kind of thing. And, of course, we've crossed the 200 moving, S&P's crossed below the 200 moving average. We have the death cross of the 20 crossing below the 50. But I went back to the October last year, I think it was, when we had a dip to the high of what we have now. And we are actually dead on a 25% retrace. And I
Yep.
thought, there's a lot of things lining up. And we've hit the 50 period weekly moving average. The 50 period weekly moving average, we've tagged it. So, I mean, we've got a lot. We're in an area where a lot of things are lining up. And so I think this is going to be a really pivotal point. Now what does it mean? Are we going to, are we going to chop for a while and then pick a direction? Are we going to bounce? Are we going to crash? I don't know. I'm not that good, but with these kind of things. But I mean, daggone, there's a lot of things on price where we are right now.
I like to say it this way: if we're gonna bounce, this would be where they would bounce it at.
Yeah.
That's just a really appropriate way to say it,
We don't have, I mean, like if you look at 2022, like the end of February or mid-February, where it undercut the 200 in January, came up, rejected it all through the first and second week of February. That was the trigger for a bear market there, yes. And then it came up, tested again, and dropped down. We don't have any catalyst that would put us in that position now.
Yeah.
So then you go look at October of 2023, tapped the 200 and bounced like a freaking missile. I mean, it just shot up. And then the same thing in this last October. Well, realistically, end of November. Kind of the same deal. Or sorry, September, not November.
See, and we had a lot of warnings on that bear market when they talked about, okay, we're going to be raising rates. We got to solve all this issue. We got the inflation coming at us like a mad demon.
Right.
Valuations on the S&P, companies with earnings. Like it was all of these things that said, hey, we're going to have to do a bear market for a while. We're going to have to slow down the recession or slow down the economy, put us in a recession. We're going to have to go into a bear market and we're going to stay in here long enough to get this fixed. And so we're all like, all right, that's what we got. We don't have any of that clarity at this point. We got nothing,
No. I mean, we've got a direction to go if the rate gets lowered and if they actually, do things right. We've got lots of up space, that's for sure, but not as many catalysts pushing us down. So it's fun watching all the Chicken Little crowd come out and say the sky's falling and let them, cluck around in the media, but we know better. Just look at the chart;
Hi.
it doesn't lie.
Hey guys, can you hear me?
Yeah.
Hey Jeremy, great to hear you guys. So Dan in England here, Moonshift here. I was just checking whether we might hit the pivot on the Qs at 450 because it lines up with a 50% retracement from September time, 2024. And I don't know, it's like we're either going to stay in a bit of a channel going up into the FOMC, but if the Nvidia event is a wipe or washout, then we're going to have much more volatility to the downside to the next pivot point at 450, perhaps on the Qs. That's what I'm thinking. But I would like to know if I can put some money into my pension before next week.
Right. Well, there is the key pivot I talked about today a couple times at 484, and that's the current retracement from the previous trend, up from let's see, September here. So worst case scenario, we break that pivot. Yeah, we do have a shot at hitting 450 on Q, and that's not a hard thing to swallow either. That's about where it should go if things turn bad. Yeah, there's lots of stuff out there that would basically say that Nvidia is carrying the whole market right now,
Was.
but it's not.
Yeah.
Not anymore. Look at the valuation has gone down. It doesn't have as much pull in the space of Mag 7 as it used to anymore. So a lot of that Nvidia market share has come out of the market anyway, even in this pullback. So now we're looking at, well, what's the next catalyst to push us up? So it's got potential to make a big drop if shit hits the fan. Sure, there's a lot of things it can, but those are surprise things. Everything that we know now is more bullish than bearish.
If Donald Trump makes enough money in Saudi Arabia or whatever he's doing, then he can just cancel the tariffs and we'll be fine.
There you go. Exactly.
Well, Saudi Arabia deal is, last I heard, is he's trying to get them to commit to $1 trillion investment in U.S. in businesses in the U.S. And I mean, that will be, he got them to put a couple billion in before, when he was in office before, but he's really going for it this time, asking for $1 trillion. Supposedly, they're willing to do it. They won't, just got to work out some details. I mean, but that's pretty amazing. If he can pull that off, that'll be a pretty big deal, I think.
Agreed. And that's also going to be, there's a hinge point on that with whatever happens with the current Hamas situation. That thing of making the Gaza Strip our 51st state or a U.S. territory, it's more than just a joke. I mean, there's some merit there. There's something that needs to happen there. I mean, this constant war is just, it's not good for anybody anymore. And not even defense contractors are benefiting from that. I mean, look at, Boeing's not taking anything from it. Raytheon maybe, but realistically, that forever never-ending situation has to come to a head, and he's done it before.
Well, I don't think he's trying to make it a 51st. Maybe I'm wrong, but I don't think he's trying to make it a U.S. territory so much. The plan, as I understood, though, is to get the local countries surrounding it to absorb the population temporarily, and for them also, and then, United States would help with the reconstruction and have business interest in it, but not so much to take ownership of it.
Right.
Now,
but the caveat is that he literally came out with an open letter saying, give up Hamas or you're dead. I mean,
yeah, wow.
You could fly like 25 B-52 side by side and flatten that whole country and not even really put a dent in your defense budget.
Well, I understand that the exodus from that area has been just exponential. The people are fleeing, and I think that's because Israel and whomever else. But see, I just don't understand this hostage business, because I would have thought that Trump would have gone after the American hostages lickety split and not put up with that. And I'm a little surprised with the delayed response over that. So apparently he's trying to do diplomacy on it. And, he has gotten some hostages back. I think they said he got 30 of them back, or something like that. But anyway, I don't want to get political necessarily there. I'm just saying, though, it's still a politically hot spot.
Right.
Still an absolutely political hot spot, and which has a lot to do with our markets right now. Talk, as long as it ties into how it affects us as traders, I think it's fine. I just We all need to be on guard about making a political stance or opinion or whatever, because that's not what this forum is about.
Agreed. We're looking into politics to find any potential alpha in catalyst for what we do. We try to take advantage of price action movement, and that's a big part of it. It sucks that we have to deal with politics, but every once in a while we've got to have the discussion, at least with ourselves, and see what we see is waiting in the world.
Now, I've got a friend of mine that is all into reconstruction ETFs and stuff like PAVE and all that kind of stuff, because he says all these wars going on, you got your companies like Caterpillar and stuff, or whomever else, are the ones that are going to make an incredible amount of money because we've got to go rebuild, or those areas have got to be rebuilt. And, he's speculating a lot that a lot of American construction companies, infrastructure companies, are going to be involved in that. So, I mean, he's kind of going long on a lot of that. I'm not so sure. I mean, American companies like Caterpillar and stuff are not the only ones. There are obviously plenty of global.
Oh yeah, JCB right over there in Europe.
Yeah. So, but he does have an interesting point, whether it's just American or international. Once all these things settle down with Ukraine and Gaza and all that, is there going to be a reconstruction? And if so, you think there's going to be a ton of new equipment churning out? I guess, I don't know.
Yeah, booing for somebody, but I mean, we'll put those pieces together as they fall into place, because we don't know how much destruction is going to take place to do this and all that stuff too. So, plenty of irons in that fire.
In the chat, I shared a picture. It's a ratio chart between the NASDAQ and NVIDIA, and it's a helpful representation of trying to identify NVIDIA's stranglehold on the broader market. And don't get me wrong, it still has a very powerful stranglehold because all those hyperscalers are spending billions of dollars, and it shows up in NVIDIA, right? We can see that from their forward earnings statements and the CapEx, and they're all talking about these $30,000 chips that they're going to buy. NVIDIA is the beneficiary, so as long as NVIDIA still shows that it's holding the line based on its earnings, then it's fine. But when NVIDIA starts acting wild, the market just disconnects. And we've seen that before. When NVIDIA had a couple of bad earnings and the market's like, nah, it's fine. They just disconnected, right? And when that disconnect happens, we need tools to be able to see it. This is a ratio chart. It's NVIDIA versus NQ. So when the white line is going up, NVIDIA is outperforming the broader NASDAQ. And when the white line is going down, then the NASDAQ is outperforming NVIDIA. We can see that we're at a key level and that we're really close to breaking down there. The next picture is exactly like the first one, but it has a purple line in it. And that purple line is the QQQ itself. That way we can see, hey, what's the ratio doing? But also, what's the Q's doing? How does it look? The moving averages only belong to that white line. They're not moving averages for the NASDAQ. So it's a little confusing to have both moving averages and a ratio and a stock, but it is doable. You just have to, apply the parts and pieces where they belong. We can see the Qs are about to break down. The ratio also shows that the Qs are outperforming NVIDIA. One more line that you could add would just be an actual NVIDIA stock. And then you could see, well, what is NVIDIA doing? How much is it going down on its own versus how much is the NASDAQ going down on its own? But historically speaking, we can see that generally when the white line is going up, the purple line also goes up. And if the white line goes down, then generally speaking, the purple line goes down. When that begins to disconnect, if the white line is making an exaggerated move really high and the Qs don't follow it, then we see the white line mean revert. Or if the white line makes a big move down and the NASDAQ doesn't match it, then we see the white line begin to mean revert and start bouncing back the other direction.
Yeah, there's definitely a delay.
Yes.
And I don't know, it's a couple days, it looks like. I'm not. You can zoom in maybe to try and get an idea of how long that delay is.
There's a really great question in the chat on preferences for long plays. So
Yep.
I'm going to go through that, but hear me out first. Let's swap over to the S&P here for a minute. When you are in a broad market backdrop that is generally bullish, which is, that's usually what the S&P and the Nasdaq do. Year over year, most of the time, they're just in a generally bullish environment. So when we're in that sort of environment, shopping around for longs is a really good idea. You'll still have losing trades, but you're going with the right flow, right? Everything else is long. I want to look for longs. That's a good idea. But when we're in a really uncertain market backdrop, and we're seeing some of the biggest, strongest names failing to hold the line and stay above their major moving averages, and the S&P and the Nasdaq going sideways, this is not the time to be necessarily shopping around for long trades unless you're willing to be in them for a while. Because as I mentioned with Walmart a little while ago, we're seeing stocks get punished because they weren't able to meet the exuberant demand that the broader market has placed on them. We're so overbought in our market that investors want to see companies not just meet expectations, but beat it in an exponential blowout way. Look at NVIDIA's earnings. They beat. They just didn't beat enough to satisfy investors. So we can pick and choose some long stocks that should have continued to go long because they had a good earnings, and they're down right now because their earnings weren't, quote, good enough. Those would be good longs if you're willing to hold on to them, right? But if you're looking for a short-term play, couple of weeks, you want to be in and out, you're going to want to be very nimble and have a very specific reason. Why am I getting into it? And hell, why is it moving right now when nothing else is moving? If you can't identify the why, be very cautious. And in that same vein, make sure it's not a company that's way overvalued, that it has good earnings, that it's just good company, right? With a good product, a nice moat around it, that they're not getting sued, right? Check the short interest. So we can certainly go through the names that you put in the chat, but generally speaking, that's the kind of mindset you want to have right now. Is the broader market is crooked and sideways and it doesn't know what it's going to do. Therefore, 80% of the broader market doesn't know what the heck it's going to do in the short term.
Exactly along the lines of what I was going to say. In the meantime, volatility is a position.
Oh yeah. And
And
the
that's,
list is good. Did you see his list?
yeah, that's a great list. Those are all the things I'm going to be watching. And then my other favorite thing to do, and this is kind of come about over the last, about the last year. It took about a year for these to build enough options volume for me to even care. In spite of me knowing the guy and becoming friends with the guy, those 2x leveraged ETFs in Tuttle's basket, NVDX has the freaking bomb ass premium right now. So while Nvidia grinds sideways, while a lot of these equities grind sideways, if you find the right leveraged ETF, you can just sit there and sell premium on them. You're technically still in a position in the company you want to be in, but now you're getting paid to hold it while it goes sideways. That wheel trade strategy, man, it's really something.
That's very cool indeed, guys. Yeah, I'm going to be studying options over the weekend for sure because sideways. I know how the price action works thanks to you guys, but clearly long plays are going to be a losing battle for the next 6 months.
Agreed. And especially if they're more sideways with broader range, because we've got some breadth in the market that we haven't seen since Trump's last administration, and it's great to have it back. I still want that hat that says "Make volatility great" on it. It's got to happen.
One thing let me point out too, though, and I was talking with somebody about this earlier today. Matter of fact, Creed and I were having a chat, and I was talking about it when you consider a hunter, bird hunter. Well, they've got multiple types of shot they use. They got bird shot, and that's the same thing as saying I'm going to take 100 positions. Some of them will fall out, just like bird shot. Not all the bird shot's going to hit the target. And you can do that, but that's a lot to manage. But if you've called out a couple good trades in here, and you're good with managing a lot of positions, then yeah, you can do you can do okay in that. You're not necessarily going to make a lot per um, per trade necessarily, but cumulatively, you may make some really. You'll have some that do spectacularly well. Some of them will fall out and stuff like that. Then you've got your buckshot, where you've got a fewer number of trades, but you take a heavier position. And then, of course, finally, you've got your slug, where you've got one shot. Now, in my opinion, I would never take a slug shot, just all money on one ticker kind of thing. I would not do that myself. I know some people, might do that on the SPY or the Qs or whatever, but we're expecting this chop, volatility, sideways action, possible pullbacks, possible recessions, who knows. So I wouldn't touch a heavy position in SPY or Qs right now anyway, with a massive percentage of your portfolio, in my opinion. But I do think the buckshot idea is a manageable, and so we might want to look for 3, 4, 5 things. Like Jeremy's been managing 3, 4, 5 wheel trades, not 20, not 30, 4 or something like around in there.
Currently 4.
Yeah. So and there's advantages to the buckshot idea. Number one is we only have to pay attention to 4 charts. Let's say if we got 4 positions, we only have to pay attention to 4 charts. And, each chart's got its personality on how it reacts to news, different things like that. So for me, I'm kind of looking for that entry for 4 or 5, maybe 6 total long-term positions that I can find. And but a lot of it is just going to be a simple waiting game. It may be next week I make one trade, and 2 weeks after that I make that second trade, and maybe another week after that I make that third trade, until I get up to that 4 or 5 position type of thing. So a lot of it, we just got to be patient. But again, as I've said before too, this is all Trumponomics hitting the market all at one time and causing a lot of volatility. And this will pass. This will pass. Don't know when. Maybe next week, maybe next month, maybe 3 months, who knows? But it will pass. So right now we're just in volatility. And so for your long-term kind of stuff, fine. If you want to buckshot around or bird shot around a little bit with small positions, just for something to do while the market settle down, that's fine. But you shouldn't have a high expectation of a lot of growth overall in the account until things settle down, in my opinion. That's just my thought on the matter.
Agreed. Trade the volatility, and you can certainly use some buckshot in it. You don't have to be in 1,000 places at once. You don't have to have your everyone always told you, like, don't have all your eggs in one basket. Well, you don't necessarily need a big ass basket either. You can just have a few eggs in there.
Well, I mean, if we make a good trade, my 3 rules have always been: rule 1, make good trades. Now that doesn't mean it works out. That means it's a good educated trade. Not every trade works out, but we don't want to make hasty trades. Number 2 rule is manage risk. Number 3 rule, manage yourself. And because of the emotion factor. And I'm one of these kind of people that I've gotten burned. I got burned pretty heavy back in 2008. And, I have a bit of a knee-jerk reaction when I start seeing a lot of negative news coming out. And so I have to slow myself down and say, wait a minute, there's always doomsayers out there. Is there any particular reason that they could be right this time? or is it a short term versus long term, or what? So managing our emotions is incredibly key. I will tell you that I am predominantly flat right now. I do have some money in, mostly in some dividenders. They're not making a lot, but it's parked there until I'm ready to move. And so it does a little bit. Um, but we just have to be cautious of ourselves not to let all the hype drive us crazy as far as making rash decisions. And but again, with all this volatility for the long term stuff, just gotta wait. I hate waiting, but it's what I got to do.
So I've got a list of stocks here. Just for a simple example, we had talked about Nvidia and Walmart. Both had really good earnings, and they sold off because the earnings weren't good enough. And Walmart had a really nice run before the earnings, right? Walmart's been doing great, but they had earnings and they said, we just don't know, but we assume that the tariffs are going to hurt us and we don't want to give really rosy forward projections. The market sold them off. I went over to the AI and said, hey, I've got Nvidia and Walmart for two examples that had good earnings and they sold off because the forward outlook is just not rosy. And their earnings, while they did beat, didn't seem to beat good enough compared to the market's expectations of what they wanted to see. Give me a list of S&P 500 stocks that had the same situation that has already reported in 2025. And it gave me a list. Now, I only asked for 20 names, right? It's not like it went through the entire S&P 500, but it would have if I'd have told it to. And it's got Nvidia and Walmart because as a layup, I already gave it two names, so it just gave them back to me. But it's got Intel, Cisco, AMAT, which is Applied Materials, Microsoft, JP Morgan. Those are really easy names. And despite a strong beat, maybe because of the tariff related banking sector fears, it sold off. So if you're trying to put together a list of stocks that may be a longer term trade, that's a really good example. Good companies, good earnings, good moat. They just couldn't keep up with investor demand and they had the tariff fear behind it. If I take that list out of the chat and I stick it in there, first we got to look at some of the names that are on that list. Some of them aren't US companies. So, are they going to get hit with tariffs or not? Can we even trust the data that they provide? That was one of the issues with those China companies when they became, quote, uninvestable a few years back, is we couldn't even trust the data that we were getting for their earnings. So that's always an issue when it's not a US company. How new is it? Is it above its own IPO price or not? Has it reported earnings or not? Has there been a sell off because of any tariff discussions? Right? Are they good companies? I guess is what we keep circling back to. And if they're brand new, we don't know much about them, they're not in the US, they haven't reported yet, it makes them a lot more risky. And then you look at things like some of these GRRR or a couple others where they went just parabolic, wild, crazy. PLTR, it just ripped like crazy from $10 to $110. That's gonna digest for a while. And this one is in the news because it's directly connected to reducing government. This entire run was based on having access to government and getting those contracts. If they're going to lose half their contracts, what are they going to lose? At least half their stock value, maybe more. It took the rosy picture that this company had and shredded it.
There you go.
So I would say it's not a good time to speculate on new companies that are struggling and are directly connected to anything that this administration is trying to tear apart.
Damn, that target was awesome. I didn't get a chance to say it, but 202.50. Boom.
So
Oh,
I
awesome.
I did feed it your list, and I hit enter before I was able to tell it what I wanted it to look through. So it evaluated your list and compared it to first, is it even in the S&P 500, which I didn't care if it was or not, but that was what I had asked earlier, so that's what it checked. But it also checked to see if there had already had earnings or not. So if I take your list now that I gave it better instructions, and I throw it in there and see if it meets the same qualifications of what we had under Walmart and Nvidia. You only had 2 Qs on this. I'm going to assume that it was a typo and that there's supposed to be 3 QQQ. Otherwise,
Oh, sorry. Yeah, that's a defense stock UK QQ.ln maybe.
yeah, we'll do that. That way you can,
It's in a bull flag, right?
you want to use the AI to give you as much of that fiscal background as you can get, so that you have a better idea of what the company does, why it's ran up really hard, or why it's falling back now that it stopped running. Palantir's an easy one to pick on because I mean I was playing it myself. I have been watching it, so I know it. Some of these I don't recognize because either I don't know its U.S. equivalent ADR or just don't know it. But you want to know as much about the company as you can to try to understand, is it a good company or not? Because right now, quality for long-term trades is going to be key, and all that speculative crazy exuberance that we were seeing in 2024, I think a lot of that is just not going to happen this year. People are too worried to speculate on crazy uranium ideas and high flying drones and you know quantum as a service when quantum is 10 years out, drones 3 years out, and people are worried about their staples, let alone their speculatives.
Yeah, it's if you got a chance to watch that podcast from Rebel Finance yesterday with Frances Stacy on, she is sharp, but she manages a lot of retirement accounts, and she's having to jump through many hoops to kind of hedge against this volatility, and their agility in being able to do so is not like mine. It was quite humbling to hear someone in her position call me a 1%er. But I mean, there it was live on YouTube. So I was like, well, no, I'm not that rich. But the point is that we have the opportunity to be more nimble than the market. And we have the opportunity to move things in ways that we are now gaining an advantage over professionals for the first time in ever. That speaks volumes to me. So like now we have access to AI to be able to do all the dirty work for us, so to speak, and kind of weed through all this stuff. Dude, our advantage is insane right now. And compound that with the volatility that we're going to have for the next 4 years. This is going to be a great time for everybody involved in learning both price action, basic chart analysis, and being able to see through the trees and pick out the forest in what we're looking into. So both short-term and long-term stuff, we've got every advantage in the world right now.
Jeremy, question for you. Based on your wheel trading for this first quarter, if things stay the same, now I don't think they will. I think it'll settle down before the end of the year. But let's just play the devil's advocate here for a moment. Let's just say that the volatility continues going through the end of the year. What would you speculate your percentage gain will be on your wheel trades total for the year? 50% of the employed money, more or less. What do you think? I'm trying to get an idea to the others about this wheel trade idea, and is it a viable idea for a lot of people?
Being modest, if you're in the right amount of volatility with the wheel trade, saying 50% is being modest. Because, I mean, you just watched me from March to October last year nail 100% on one wheel trade. And that was the only one I really did that year, other than a couple small ones, but that was my main focus. So it's not going to be something that you can do with everything. And also if you're dealing with something that has enough volatility to produce the kind of yield that I'm going after, you're going to have to be pretty savvy with price action. So it's not going to be easy. However, even if you're not perfect at it and you can reasonably find swing trade setups on a chart, you're still going to be able to do pretty close to that by the end of the year, about 50% saying, being modest.
Now, the reason I bring that up, we've got so much pessimism on the market. Talk right now with JP Morgan and Morgan Stanley saying 5-10%, maybe 15% this year, blah, 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 blah. And remember, the markets could pull back 50. This is not a prediction. This is an example, but the markets could pull back 50% and then make a 70%, 75% recovery. I mean, you do the math, blah, 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 and all that kind of stuff there. And we're still 10% up for the year. So they're predicting through the end of the year. They're not talking about what's going to happen between now and the end of the year. And that's important to remember. But my point to the users, to the members, I should say, there are other ways to trade. There are other ways to trade. And I was talking with Creed this morning, and he has a mind-bending strategy of trading 3 different types of futures, that 2 are long, 1 is short, and they're differently balanced and differently leveraged in different ways there, that he's able to get more gain than loss and all this kind of stuff. And it was way over my head. I'll be quite honest. It was way over my head. Now he knows how to do that kind of stuff. Fine. But there are other ways to trade the markets other than just buy and wait for it and hope that it hits target.
Of course.
And so, this very likely is going to be the year, and maybe next year. Who knows? Who knows? We don't know. If we go into a recession or a stagflation, a sideways chop, then, we're going to have to be open to other ways to trade. And, if we're not finding good long positions for our, something like that, then that means we got lots of time on our hands to learn a new trading system. And that's a good thing.
So let me break it down a little bit, just for a moment. So in the time from March to October last year, and then the time from, I guess we would say, actually I didn't take another position until November. From November till now, in that time, I wasn't able to fully focus on the wheel trade for TNA like I could have. I was distracted by many things, live streaming, building videos, writing articles, all sorts of fun stuff in the meantime. So I wasn't able to focus on 100%. So I call it kind of sloppily traded, and was still able to perform that. Now, overall cost basis is going to be based on half a position size, because the objective in the wheel trade is to remain half a position worth of cash ready to deploy into selling puts at all times. So that's rule number 1. So with that, if you're looking at cash outlay, you have to count that as part of your cash outlay. Because
all right, so that still gives you a net 25%. If you made a 50% using half, then that gives you a net for your total cash portfolio value of 25%.
Correct.
Which the markets did that. S&P's been going up these 20% and stuff like that. So learning something like this, possibly this wheel strategy, that means, folks, that, you could do the same thing you can have the same performance as the S&P did last year, but if the S&P doesn't do it this year, you could still beat it.
Here's the kicker. You always have that extra cash as dry powder to do whatever you want with in the meantime.
So when it comes to the wheel, I know there's different approaches, but the tried and true has always worked. And the idea is that if I find a stock that I like, that's one of the key pieces, right? It has to be a stock that I like because I'm going to end up owning it for a while, and I don't want to own some junk IPO trash, no name Joe Schmo lawn mowing company. If you go in and you look at a lot of the stuff that small accounts can trade, they're not going to give you pretty good returns because their options are junk trash that nobody wants to trade, right? So you're going to, if you want to focus on a wheel strategy as a career, for an example, be a trader, do the wheel strategy, you want some capital to trade some good companies. That's a piece. Take Apple. I love Apple. Everybody loves Apple. Microsoft, the Mag 7. Apple's got options that are trading. We could just jump out to July. They are $16 to $20 on the calls, $14 to $12 on the puts at the money. I don't even have to reach far out in time. I can sell $14 puts. It's $1,400 puts. That's nice. And what happens if I get assigned? It's Apple, for goodness sakes, right? Like,
Right.
or just if you want to be safe, if you're trading the family's money and it's, the kids' future, go to the ETFs. You can sell a put in SPY for $24, $2,400. And what's the worst that's going to happen? You own SPY? So, okay, I ain't scared. It's SPY.
Yeah, but that would be a $57,000 outlay,
Yep.
or excuse me, a $660,000 outlay, offset by your premium collected, which puts that quite a bit out of reach for most people, I
The
would
idea
think.
behind it, though, is good quality stuff that we are confident about is something that we can
Right.
trade better, right? You start getting into
Yes.
parabolic, crazy stuff, then we get scared, we make bad
Yeah.
decisions, we don't get
Yeah.
good premiums. So the obviously the rich get richer, right? Because they're the ones who can trade the Qs and the SPY with a short put. For the rest of us, start with good companies, even if they're cheap good companies. I hate Ford because it has no premium, but Ford's not going
Yeah.
to go away.
No,
AT&T
it
is not
never
going to
does.
go away, right? But there's just no premium in those. So great, they're good companies. They're not going to go away, but I can't make any money on them either because there's just no darn premium. So we have to balance it on one side of is it a good company, and then we have to balance it on the other side of do you have any damn money? Because if it's Ford, I don't want it, right? It doesn't have any money in it. If it's AT&T, I don't want it. It doesn't have any money in it. The only way it'll have money and be a small company is if there's volatility. So
Yep.
you have to be willing to take the risk, but it still has to meet your qualifications that it's a good company. It's not going to disappear next week, and it's not a Palantir or a D Dog or whatever, right? Some cheap little no name company.
What's your
Yeah.
take on MSTR?
Yeah. And well, my
Yeah.
point there, I wasn't so much saying that the wheel trade is the end all be all, but to illustrate the fact that there are other trading strategies
Yes.
besides just buy and hold.
Well, the wheel is
And
awesome, though. I mean,
yeah,
I
yeah.
love to lift it up and say it is awesome because it is awesome. But it's
I mean,
only awesome if you have a really large account. It's good
Yeah.
if you have an okay account, right?
years back when I don't know, 4 years, 5 years, 5 years ago, I'd say, it was my first run at doing the wheel, and I was excited because I was making $1,000 a week and all that kind of stuff trading the wheel. What I didn't know, because I didn't understand price action and many things back then, and for just a little background to some of y'all, I came into options before I learned price action, which meant, quite frankly, I lost my ass a lot because I didn't understand price action. But I was trading trash companies, making incredible premium, thinking this was great. And then these companies started collapsing. And then when I ended up having to just outright sell them to get out of it, um, you know, at best, I broke even against my premium because they were trash companies. And, these were $5, $6, $7 companies. And
So
I was making incredible premium. But like I say, when they crashed, they fell so far below my cost basis so fast that I just had to just cash out and, take my licks and move on.
one
Um,
that I just ditched before it got delisted was LODE. And by the time I was done selling options on that thing, because it never really made anything over 50, 60 cents, it spiked $11 one day, and like I cleaned house selling calls. Long story short, my cost basis on that over the time I traded it, which was about 4.5 years, was negative $36. That's huge. And it's a penny stock. So even if the company went broke and I didn't get out before it got delisted, I still made all that. That's all in the bank. That's all. That's the difference, is that premium goes right in your pocket.
well, bear in mind, for those of you, when you hear Jeremy say cost basis,
Yeah,
that means his his profit compared to the stock value,
correct.
meaning he's not holding the stock. When that covered call hits and he's out of the position in flat, he gets back in, he gets out, he gets in, he gets out, but he's looking at his total profit against the cost of the stock at a time. So just kind of keep that in mind, Jeremy. I'm not didn't
Oh, that's fine.
that's I'm just trying to clarify, so people, because people may think you're still holding long the
Right.
stock.
For me, it's easier to track with a cost basis perception rather than a profit perception. It also keeps any emotions out of it. Like if I go, oh my God, I made so much money, you get excited, you give up because you're like, you just want to take the profit and leave. I keep looking at it as an income strategy. I own this hotel. I'm going to keep renting that bastard out till it collapses. So um, like I was asking Sig to take a look at like MSTR because I'm currently trading, and I started this position on February 28th, MSTU. And this is where you can have a really, really small account. And if you're very careful and you know price action well enough, you can very quickly clean up some serious premium on that. Mind you, it's not going to come without risk. MSTR, I don't have any faith in that thing. I have no idea if it's going to go bankrupt overnight or if some lawsuit's going to smash it, whatever. But in the meantime, I own MSTU at a current cost basis of just $4.25. So I mean that's $850 per 200 share position, which is 100 shares long and cash to cover a put per position. So I mean that's very cheap. And I entered that position on February 28th. It is now March 7th, and I'm already well ahead of the current cost, which is trading about $6. So there are situations where you can, with a small account, make premium in a big hurry, and you can do it, but it's not going to come without risk. That's the thing, is like you can go and not bet the kids' college fund and just start learning the process on something this small. And most people would be able to take it if things hit the fan.
The November candle of 2024 on the monthly is the low that I would not want to see it get below. But as long as it holds above that, it's like 220 on a monthly, which would be say 250 on the weekly. If you wanted to tighten it up,
Yeah,
that'd
that's
be
about
a
where I'm
line
at.
in the sand. Yeah.
And why do you say that?
A couple of reasons. It's a 50 period moving average on a weekly. It's if we go back to the monthly, that monthly candle is the boss from November. Remember FOMC and all that? That's when everything changed, November 18. So everything changed. We have to be concerned about getting back to where we were, normalization and all that, and we got to stay above that month's low. So for me, when I'm uncertain on a chart that's sloppy, I just go to a higher time frame to get a better idea. And then experience helps. Since I've been around, I remember November 18. If somebody just got here in January, they weren't trading in November. They don't remember. They didn't have any exposure to it. So we got the idea of FOMC, we had the event, we had everything change, we had the elections. So it's a key level. We're stuck inside of it. It is the boss. And then when we go into a lower time frame, we have the 50 period moving average on the weekly, and that lines up with a line in the sand you don't want to cross if you want to stay long. Start breaking down below the 50, you start losing investor trust, and it'll break down worse. And they already had trust issues. So we don't
Yep.
want to see that get we don't want to see the trust issues get any worse.
In the meantime, my projection is I might own that for free in like 5 weeks. So that's it's not going to come without risk though. I'm just going to straight say that is the disclaimer to be.
The
And
really
I
cool
don't
thing
trust MSTR either.
is if you have like a 500,000 or or more, and you want to go and start a strategy in trading, that there's a space for that. And if you have $200 and you want to go out and start trading, there's a space for that. Like 10 years ago, if you didn't have the money, you weren't playing, and that's just all there was to it. Good luck. See you later. Nowadays, you can start with a small amount, you can start with a big amount, and there's room for everybody. And easy is not a good word to use when it comes to trading because nothing about this is easy. But there's tactics that work for whatever you've got. So if you got $50, there's room for you because we can do fractional trading if we have to. You can trade Google and Amazon and MSTR even with just $50 with fractional trades on something like Webull or Robinhood. Nothing is out of reach nowadays.
Yes, sir.
That's very true because especially if you're a younger, younger's wrong word, newer trader. What Signet's talking about 10 years ago. 10 years ago, it was $7, $8 to take a stock trade
Yep.
each way. Each way. Didn't matter whether you bought one share or 1,000 shares. It was $7, and so $7 to $8, whatever it was. And so you're looking at just $15 in commissions to take the trade, regardless of how many shares it was. And uh, then we had something called pay for order flow come through, which most of the companies today use. That's a different discussion, but anyway, um, and we've got all these tools now, like TradingView. We've got Spot Gamma. We've got all this kind of. We have a lot more information now. On the flip side of having all that information is the information overload. And so this is where you kind of got to say what information is relevant to my trading strategy. And we have to kind of figure that part out because information overload just leads to information constipation, where you just sit around there and stare at the chart while the day just keeps moving on. And but but yeah, it is really just an amazingly um, great time as far as being a trader today.
Definitely.
It is a great time to shop around. I've been encouraging patience for people. I know we all want to buy the dip, take advantage of it, but the market doesn't have to buoy back up. As much as I think it's going to, I really think they're going to come in and play save a hoe and run it back up. They don't have to. And if you buy the dip, you can get kicked in the face. If your time horizon is long enough, it's fine. You can just hold through it. But that could be a year, 5 years. Nobody wants to talk about that, but it can happen. So instead of putting yourself in risk, if you're shopping around trying to build a broad portfolio, shop around on paper. It's like, going to the car lot and just test driving a car. Shop around on paper, find companies you like, dig into them, do the research, be willing to hold them for a while, understand what they are. I know how boring that sounds. I remember when I was new and people were telling me that, and I'm like, whatever, I just want to trade. It's moving. Can't I get it? And sure, if you're going to, 20-minute trade, 2 days, sure, get in, get out, who cares? But if you're looking to do a lot of money, spread it out into a diversified portfolio, use this time to shop around because there's some really good names out there right now. My two that I keep coming back to at the moment is Walmart and Costco, but um, NVIDIA does fit the bill, and so does so many others. PayPal, all the Mag 7, really. There's a ton of names out there right now that fit the bill. Good companies with strong earnings that just didn't impress enough and they got dumped on their head.
Very well said. Oh man.
Yeah, Moonshift, where you been anyway? I ain't heard from you in a while.
Oh, it's good to hear you guys too. um, I'm a music teacher, and I have been trying to kind of build up business because I got distracted with the trading so much. So I'll get back into trading in about maybe 6 weeks or so.
Okay, okay.
It's a shame because it's been so volatile. I could have made a grand a day on some days, but it's very. I mean, although I do love trading, I know that it's very time consuming to do it right. You know, you can't just jump in on a whim. You know.
I got to tell you a funny story. Since you say you're a music teacher, I saw a video the other day of a hurdy-gurdy, and I thought, what the hell is that? And I got the more I started looking at it and staring, went on to YouTube and saw it, and I said, my God, it's a violin with a rotary wheel that's got a keyboard on it. It's amazing. And have you ever seen one or used one?
No, no, no. But I've had haggis before.
Okay.
Are you Welsh? Oh, I'm just kidding.
A hurdy-gurdy is two words hyphenated, HURDY hyphen GURDY. It's got violin strings on it, but instead of you pulling a bow, you turn a crank that is a wheel that's a bow. And so the wheel moves against the strings. And instead of using a fretboard, you use a keyboard like a piano. So, or like maybe an accordion or something like that. So you got a keyboard for one hand and a turning wheel for the other. And it was amazing. Absolutely amazing. I'd never seen anything like it before. Apparently, they used to use it in churches before the organ came out, but it was much bigger. It was a two-man thing. I've heard tell. I don't know, but
No, that sounds really cool. I'll have to get my lederhosen out and but there's that other thing. Have you heard of the theremin?
I love to listen to them, and I've been tempted because you can get the Theramini for about $300-400, and I like music, but I can't play worth a 2 cents. I do have a dulcimer, and the only thing I can play on it are basic Christmas songs. um, but the theremin is so cool looking.
Yeah, if you watch Bill Bailey, the comedian, um, he's hilarious. If you like a little musical comedy, which I'm sure you might.
I just had to post that one.
In the chat, I put in AI prompts for FX forecasting, macro to micro forecasting, and stock analysis forecasting. That way, you guys can go to your popular AI product and run a forecast. I do like Grok personally for this, but as long as it's an advanced AI model and it's using current data, should be okay.
I'm noticing you're avoiding this iodine thing. Or you just haven't made up your mind on it yet, or is it overkill, or what?
On which one?
The AI accumulator site, ithy.com.
Huh.
That's the one that you give it a prompt and it sends it out to all the search engines, summarizes their answers. Um, it's interesting because it gives you a 10-page report. It's a little overwhelming, but
Oh,
it can be.
yeah, no, I remember you had brought this up, and I took you at your word when you said it was vastly detailed and analysis paralysis, and so I never went and checked it out. I thought if it's going to just puke on me, I'd rather find something that is strategic and uses a scalpel rather than a hammer.
Yeah, fair point. Fair point. Yeah, the iThine, what it does, it submits your query to all the to all the AI engines, and it goes and searches Twitter, and it searches the general internet, and it tries to build a comprehensive answer, uh, and it gives you a very long answer with a lot of detail in it. Um, but AI today mostly predicted a bullish close to the day, and we obviously see that did not happen.
Yeah, I don't think that anything can predict on an intraday basis what's going to happen at the beginning. You know, unless it's smart enough to look at dollar yields, news, blah, blah, blah. Because my forecast changes throughout the day as news comes in and blah, blah, blah. I mean, it has to in this environment. When we were
Yeah,
still in the old administration, we could nail the whole day pretty well as long as we didn't get news that shocked. We could have a really good forecast on the day, but not in
we were
this
damn good
administration.
at it.
Yeah, we were. And now it's humbling to just, be so dead wrong from morning till noon or noon till 4. So I'm just fluid at this point.
I mean, there's certain pivots and liquidity zones that I can put in place and go if this then that. I
Oh
can
yeah.
make all those
Yeah.
statements.
Those are
I
still
can
working, right? We can
I
if
can
then 100%.
right.
Yeah.
I can generalize what I can spot as a potential midday swing. I call it most of the time, but sometimes you just can't. Like once we smoked that 484 pivot, I was like, well, this could get interesting. And then it made a full measure move from opening high to that low. It's exactly one block down. And it bounced right under the pivot. So then we had a nice, beautiful double bottom and right back up to where we started. I could have called that out after the break in the reversal, but I couldn't have called that out in the morning. No way.
Exactly.
Yeah, I just thought it would be a fun experiment to try. Um, I wouldn't say that I would bank a lot of money on AI yet. So,
That great use and potential, but it's going to be, you still got to learn how to prompt it correctly, just like you did when you were learning how to use Google.
well, yeah, and certain things like I found that Copilot has no concept of the calendar. It just
Yes.
doesn't know. it say you're looking for something that happened since 1980, and it'll start quoting you stuff that happened back in 1950s, or it doesn't know how to count calendar days worth 2 cents. So each search engine or AI engine has its strengths and its weaknesses. Copilot's not good for anything to deal with calendars. This new Grok is fascinating, though, um, and I'm looking forward to spending more time on it to to compare it. And the funny thing is to ask like Grok, compare yourself to other AIs and give me the pros and cons. And it did. I did, and it presented its. I'm stronger at this. They're stronger at that kind of thing. And I was like, well, that's cool.
Hey, um, grab your AI real quick and kind of look up a bio on Dr. Lior Herman, Lior. I'm gonna set a theme for next week. So I get to be on a call with this dude on Rebel Finance on Thursday next week.
What's the name again?
Lior Herman, Lior, an Israeli guy. He's got a doctorate degree. I should call him doctor.
Herman, Herman.
Yes. he does a lot of kind of administrative stuff with like energy exchanges and energy finance sector stuff like that. And I'm on a theory that I think natural gas infrastructure is going to be a great theme over the next few weeks here. That's why I'm looking at NFE so very in depthly. That I'm going to see if I can ask him what his take on it would be on a global scale, not just in a U.S. scale. But we're going to kind of touch on, okay, well, yeah, we know that U.S. data centers are going to consume a shit ton of energy. You know, natural gas is the fastest way to get it. What's this going to do on a global scale?
You're looking to take over the world? Okay, so your Herman fella here, a lecturer, assistant professor in the Department of International Relations at the Hebrew University of Jerusalem, expert in international political economy. Background
need to
in,
talk to the guy.
yeah, sounds cool.
I just made a thread. I'm gonna have to post it in multiple pieces because it's big. But I put the little thread there first so that you could have the thread intro. And when you open that up with what I'm about to put into the chat, you'll be able to see the results of what I got when I did a deep dive on him. And he's impressive. It's no surprise that he wants to talk to the 1%er.
No.
Yeah, sir.
This is something that Matthew Tuttle has been putting together, and he's got some pretty big names lined up. I can give the next two, but I can't give away the third and fourth yet. But the way it's going to be is that we've kind of put together a mission to bridge the gap between retail and professional. That's kind of been our mission. This gives us exposure to be able to quiz not just the professionals, but the people who are literally employed to study these economic things. That's kind of neat. So we get this opportunity to kind of inquisition these guys, I guess you could say, because we grill them. And I got to say, the last guest, she was sharp. Oh my gosh, I really like her. But we're in a position now where we get to ask some pretty serious questions of these people, and then at the same time, kind of put our spin on it to where, like, well, what are we looking at? What should we be looking at for finding any alpha in this is the real question. And then we can all kind of join forces on that. So that's the other benefit, is that we get to be able to kind of put our heads together. It's like a group think, but with an actual professional panel.
I used that iffy, and I used one of the prompts from the AI list that I developed for you guys, and I ran an outlook for Apple. The results, I posted a link above. You could just scroll back to it. It is very detailed, and
Yeah,
but
yeah, it's
it does
like
break
10
it.
pages.
I like how visually they broke it apart. They use colors, different sizes of text, some visuals. Like, it's not just a text document, with bland font that makes your eyes water and gives you pain behind the eyes. This is well written, visually appealing with the different colors and the brighter fonts, and just, yeah, I think they did a good job. It's nice.
For heavy users, they're going to want like $5 a month, which is very reasonable, incredibly reasonable if you use it like this a lot. But it's got like a daily counter reset or something like that. So you get so many per day or week or something like that for free. But it's a long read. I mean, daggone, if you did a control P here, I bet you every bit is 8 pages long.
I would be interested in comparing it to something that's a little more simplistic, like you know, you can go on Thinkorswim and you can see the report for a company like Apple. You get it right from the broker, right? Those ones that you get, I'll do it on screen so you guys can see it. You go to fundamentals and you get CFRA reports, Market Edge, Argus, Morningstar. You can get all of these reports, and it doesn't cost you anything for most of them. One or two might be pay to play, but you also have the performance metrics. Are they neutral, bearish, bullish? Are they recommending a buy, a hold? And then they have the downloads to where you can download the report. I would be interested in looking at one of these generic reports that have been around forever and ever. Compare that against something like IFI after it went and did a detailed outlook for the same thing.
Take those reports and throw them into Notebook LM.
I have attempted something like that recently, and it was like listening to two math nerds on an audio podcast. It was horrible, really horrible.
Hypotenuse of the square root of pi. Oh man, that could get annoying.
Yeah.
Gentlemen, I'm going to break off here. Thank you. I've enjoyed the afternoon. And for everyone else, I hope you got something out of the session today and learned maybe a little bit. We're very fortunate to have the bullish bears around because it's just small enough that we can all jump in, talk if we want, type in comments and actually get responses back. We can wander and we don't have to stay on target 100%. And I've said it and I said it over and over and over. But until you go shop other services, you don't realize necessarily how lucky you are to be in this group. I'm not a moderator. I'm not compensated. I'm just an enthusiastic member. And, I appreciate all the moderators.
We appreciate you, man.
Yeah.
So hope everybody has a good weekend. Y'all be good. Thank you.
You too, man. We'll see ya.
Me too. I'm going to duck. If you guys have questions, topics you want to hit on, charts you want to analyze, as always, throw them in the chat. Any moderator can do it. I try to reserve my afternoon streams for swing trades, but by all means, we don't have to. I trade everything just like the other moderators. We're diverse traders for a reason. Because if what we want to trade today isn't moving, we'll just trade something that is moving. So,
Sir.
You can ask
That's
me,
our
you
MO.
can ask any of the others. It's what we do, and we're glad to do it. So if we're missing topics that you want to cover, tell us so we can get it put onto the next level library. We can build out the database with more information. We can do live streams to help you and get you pointed in the right direction.
And I do have a homework assignment, man. Get an hour, watch this video. It will
it's on my
open your
to-do
eyes.
list. It is on my list today.
Yeah, you're going to understand just how much I hate GM, but you're also going to understand why I'm actually liking what the tariffs are doing, not just to the market, but to the actual economy in the long run. You'll see a lot about it.
Yeah, I've been digging into the macro to micro over the last month and a half. I don't have a complaint with what they're doing, and we're going to just have to sit through the punishment because I want what's coming on the other end.
Absolutely. Same here. This is a long game of 3D chess. It ain't checkers.
Yeah. All right, everybody. Enjoy your weekend. We'll be back at it Monday.
See you, man. Have a great weekend.
You too.